Hey everybody, welcome back to Trades and Gains. I'm your host Max Pitts, and this morning we got our producer price index numbers for November. So let's dive into these and see what happened exactly. Now, the PPI measures the average change over time in selling prices received by domestic producers for their output. In simpler terms, it tracks price changes from the perspective of sellers at the wholesale level before products reach consumers. Now, our November 2024 PPI highlights would be an overall increase. The PPI for final demand rose by 0.4% in November, slightly above economists' expectations of a 0.3% increase. This marks a continuation of inflationary pressures at the producer level. Our year-over-year change on an unadjusted basis, the final demand index increased by 3.0% over the past 12 months, the highest annual gain since February of 2023. And for core PPI, which excludes the volatile food and energy sectors, rose by 0.2% in November, aligning with forecasts. However, the year-over-year core PPI increased to 3.4% from 3.1% in October, indicating underlying inflationary trends. Our breakdown by categories that we can look at down here. Our final demand services, prices for final demand services advanced by 0.3% with significant contributions from portfolio management fees, which jumped 3.6%, and airline passenger services up 3.2%. The index for final demand goods edged up by 0.1%. Notable increases included an 8.4% rise in carbon steel scrap and a 7.5% uptick in diesel fuel prices. Conversely, liquefied petroleum gas prices fell by 18.1%. Persistent inflation at the producer level suggests that consumers may continue to face higher prices as business often pass on increased costs. This scenario keeps inflation above the Federal Reserve's 2% target, influencing monetary policy decisions. Despite the uptick in producer prices, however, the Federal Reserve is expected to implement an interest rate cut during its December 17th to 18th meeting, with the market pricing indicating a 95% likelihood of a quarter-point reduction. The Fed aims to bring inflation closer to 2%, its annual target, confident in the long-term downward trend despite ongoing challenges. Now, why should you care exactly? Understanding PPI data helps us anticipate future consumer price changes and grasp the broader economic landscape. As inflation affects purchasing power and interest rates, staying informed enables better financial planning and decision-making. If you found this breakdown helpful, please like and subscribe for more economic insights. Have questions or thoughts, drop them in the comments below. Thanks for watching, and I will see you later today as we have some more stories coming down the pipe.